Good morning, everybody. I'm Charting Man Dan with the Chart Guys. We're going to check in on the market here. Right now, we've got an initial bullish reaction to the jobs report, which is keeping pressure on the bears after an extremely strong day yesterday. And bulls are trying for another gap up open. We'll see if these gains can be held into the open over the next hour. But it is a bull flag from overnight confirming. Not entirely surprising. If you saw the video that I did yesterday at the end of the day, we could see that, again, the sectors were doing their inverse relationship where XLF popped up over the high of the day as soon as Apple started showing some weakness to offset that and to position bulls for the potential bull flag continuation. So we know we're definitely extended here in the short term on this move, but there is absolutely no sign of weakness at this point. And we also have to keep in mind that because of that strength from yesterday, we have tons of space for hourly higher lows to be the result of next consolidation. And so aggressive bears today are looking for an hourly higher or hourly consolidation, and patient bulls are waiting for, a couple hours of pullback to look for that hourly higher low. Just looking at SPY, we could say anything above the low of yesterday on SPY of 426.56 will be an hourly higher low. So bulls still in complete control. And again, for me, this bounce is more convincing than any bounce that we've seen since we topped out over the summer. And so again, the next question is going to be, can the bulls confirm the daily uptrend next time we consolidate? But we know we have tons of space for the daily higher low, and we'll certainly be watching for that next week. And so there are going to be bulls looking for daily higher low entries that may have missed this time around. Yesterday was a day where buying a gap up would have worked out for the bulls. And I personally did not long anything yesterday. And I look at that and, a lot of people, newer traders, are going to look at that and say, I maybe should have done something different. I maybe should have longed there. Whereas someone that's been trading every day for many years knows that if you take a sample size of 100 gap up opens, if you're buying the gap up open, you're going to lose more than you win. And so for me, it's the kind of day where, let my long-term IRA do its thing, and my day trade account, nothing really happens, and it's uneventful. And so same thing for me today. I have no interest longing a gap up open. If I'm looking long, it's going to be on hourly consolidation, knowing that hourly higher lows are the most likely scenario for many, many things. And if I'm looking short, I personally, at this point, want to see a sign of weakness. I need bears to give me a reason to look short. And that's what I said yesterday, and they didn't give me a reason to look short. I did grab a little bit of a protection position up around here, and that's just because yesterday was one of the most bullish IRA days that I've had of the entire year, just because of AI, which we'll look at, that had a ton of strength, and TLT, a new position, and SPY, of course, was up big. So personally, I'm looking to protect some of that, but I'm not fighting these bulls at this point. And bears are going to try again, absolutely, on a second gap up open in a row. And this is actually a third gap up open on XLF. Yeah, third gap up open in a row. And that is a bearish reversal pattern. Doesn't necessarily mean we're going to be red today. It's actually the fourth day after the third gap up open that is usually the red day as a part of that pattern. But we obviously know that bulls are real extended if you gap up 3 days in a row. And so this is an extremely strong move overall in the market. Yesterday I was in the video again admiring the ARKK bull volume on the gap up day, highest volume in 7 months. And so they're going to try and gap up open again. And again, every single name looks like this with no real hourly consolidation yesterday and a ton of space for an hourly higher low to be the result of any pullback that we see at any point today. So bulls are trying to cruise into the weekend here, looking pretty darn good. And again, the amount of retracement that we've seen on these bounces now is it's the strongest bounce at any point since we topped out. We can definitely say that much. And we're going to be watching for the inverse head and shoulders attempts into next week. Just a heads up, I'm going to be doing a cannabis video this weekend, or this afternoon for the weekend, and also a crypto live stream this afternoon. So I'm not going to go as in depth on those topics as I will go in depth in those videos. QQQ, again, same deal. Second gap up open. That might be the third gap up. Yeah, that's the third gap up open in a row on QQQ as well if this holds. We still got an hour, so we could see some consolidation and give some back. But again, you look at the hourly chart, and with no hourly support established yesterday, I do look at the extended hours lows as a level that does matter. 361.43 is the level for the bulls to maintain complete control on QQQ. The dollar, big drop down. That's exactly what the metals bulls want to see. Looks like they're seeing some strength. We'll look at that in just a moment. Again, I'm watching this dollar megaphone. Bulls are loving the rejection from weekly resistance. A failed bull flag, and now we're back to testing the lows. No, that's not how I had it. This is the 12-hour dollar megaphone that we're keeping an eye on. So we'll see if we bounce off this support line to continue paying attention to this into next week. But 105.36 quickly coming into play. And again, if we break that level, the 3-month time frame here, we got a month left in this candle. I know we got 2 months left in this candle, so a long way to go. But again, we're scouting a 3-month long-term lower high in the dollar. And if we break to a lower low here, it's the first baby step towards that taking shape. And so with that, we got gold strength, daily higher low set, heading back up towards the high. $2,010 is resistance. That's now less than 0.5% away. So a lot of strength for gold. Simple statement on gold. If bulls are holding 1969.91, they keep complete control of this uptrend and continue to march towards all-time highs. Silver, tightening daily equilibrium. Bulls would love to break the high of yesterday, 23.13, but just tightening up here. And definitely a bit weaker than gold still overall. And the miners trying for a weekly higher low, and they're going to be gapping up over the high of yesterday. And so daily bounce more convincingly underway. GDX is going to try for a daily inverse head and shoulders. 29.36 is resistance. Again, so a lot of daily inverse head and shoulders now shaping up out there in the market. And GDXJ was a bit stronger. It double bottomed. And so we're going to watch 34.64 resistance from here. So metals trying to shape things up as the dollar weakens. Oil. So oil is seeing a hold of weekly support. We held it by 2 pennies into a pretty decent daily bounce at this point. And so again, I'm open to the possibility that the oil bulls form a weekly equilibrium. And we'll look for a lower high compared to 89.85, but this essentially has me being a little bit more patient on looking short on XLE. XLE did have a big bull day yesterday. And now pre-market, gapping up open with everything else. So I'm looking for a lower high on XLE compared to 92.56. But again, just being a little bit more patient because of the magnitude of the broader market strength on this move. Natural gas, daily equilibrium continues to tighten up. So daily higher low now set at 340. And anything under 363 keeps this equilibrium going. So looking like we're going to continue tightening up into next week, and we're going to look for a break within the first couple of days of next week of this tightening range. And Bitcoin trying to maintain 12-hour EMA 12 support. And actually, we did just close under it, which is a bit of a red flag just in the short term. And we're going to be shaping up here for a bearish weekly candle. And still a couple days left on this candle Sunday. But just prepared for weekly consolidation. And for me, the statement was if we lose 12-hour EMA 12, that's the first indication to me that something is shifting because we've been holding it for the last 2 weeks. And so bears are going to be hoping that any bounce on Bitcoin from here shapes up a 12-hour head and shoulders. But it's never a good thing to confirm a bull flag straight into consolidation. And I'm still seeing tons of similarities between gold and Bitcoin. And I know a lot of people dismiss that as, they don't want to pay attention to it. but gold has been leading Bitcoin for weeks now at this point. And let's just go through some quick comparisons here where, the gold bulls really started showing up October 9th and then in a big way October 13th. The Bitcoin bulls didn't start showing up until the 16th, so a few days after that. Then we had a daily bull flag in gold, and that confirmed October 27th. We then had a daily bull flag in Bitcoin that confirmed 4 days later, November 1st. Gold confirmed the daily bull flag straight into 3 days of consolidation. Bitcoin confirmed the daily bull flag straight into our second day of consolidation. That's enough of a similarity. I mean, I just laid out 3 similarities where gold has led by multiple days, and then Bitcoin did the same thing. 1 time's a coincidence, 2 times is start paying attention, 3 times is there's something there to be paying attention to. And so hopefully for the Bitcoin bulls, gold can head to a higher high here and try and keep some confidence for some continuation. All right. So one thing I want to talk about, just on the note of cannabis stocks, and again, I'm not going to get in depth into them until I do the video this afternoon. MSOS had the pump on the news and then came back to test all-time lows and a decent little bounce here with the broader market since then. But still a ton of work to do. Have to confirm a daily uptrend for this not to be a daily bear flag, because a daily bear flag is still on the table at this point. But one point that I want to make here is I will get questions about going long in cannabis and interest in going long cannabis 5 times as much, 10 times as much as I'll get a question about going long uranium and CCJ. So I understand why. It's the story. It's the story that gets people's interest. But cannabis has been in a downtrend for years and is testing all-time lows. And uranium has been the strongest sector for the last couple of years and is at 17-year highs, and all-time highs are coming into play. And so if you're looking long, you don't want to be, I know the psychology is look at the thing that's cheap, look at the thing that's really beaten down and can go up a bunch. When in reality, you want to be going in the direction of the trend that you're looking. And so it would make so much more sense to be looking long something that's in a monthly, weekly, daily uptrend versus something that's in a monthly, weekly, daily downtrend. And that's just not how people's brains work. But I cannot stress enough, playing with the trend. There will come a time where the cannabis sector is in a daily and a weekly uptrend, but that time is not now. And so CCJ, after earnings, weekly continuation, new 17-year highs, and now the all-time high of 45.26 is likely going to be hit sometime in, whether it's the end of this year or first thing next year. And so the moral of the story is just try and ditch the story of why you're interested in the stock. And I know fundamentals are the story, but it's just so much easier and so much less stress and so much more forgiving to be trading with all trends in your favor. Everybody makes a bunch of money in bull markets because you're in monthly, weekly, daily uptrends. And even if you make bad entries, even if you're not good at technical analysis, you get bailed out because you're trading with the trend. So CCJ has got a lot of bulls looking for daily entries on next consolidation because we had this earnings reaction. We headed to higher highs. It's going to test the high of yesterday first thing, if not break it. It's just a beast. So I'm going to be interested in the swing entry. I held off on looking long on CCJ pre-earnings, but definitely going to be looking for a daily high or low entry at some point next week. AI. So as I mentioned in the video yesterday, AI was just trying to convince me to sell this position every day this week, aside from yesterday, and then plus 13% seemingly out of nowhere. And so if we get over 2750 convincingly, I'm looking at 2809. And again, this is the pattern that I've been talking a good bit about the last couple of months, where you get the balancing out of the scales before the momentum change. And so you have supply outweighing demand, and then the scales level out, and it's evenly priced, and supply and demand is balanced, and then the scales tilt. And so that's now what AI is doing, and that was the reason for the entry, is, looking for this sideways range to try and break bull for a monthly higher low. And we now have that shaping up as we have broken the high of last month, October. There's a lot of space for a monthly lower high under 44.90, but now it's just a question of how long can bulls keep some of this momentum, and AI bulls and any growth names are hoping that ARKK volume is indicating a more significant bottom being set. Again, still tons of proving to do, but certainly going to be paying attention because of that volume. So stock's still strong. We still have the bullish reaction here. Gap up on XLF, QQQ, IWM, SPY, everything's gapping up. It's just a lot of strength. It's a short squeeze. This is a short squeeze. Usually, people think of short squeezes as huge explosion candles, and in lower liquidity markets, that's what you get. But you can also just look at the mindset. Look at this chart. I mean, we know where we're coming from. We're coming from the bears having complete control and complete confidence, hitting the lowest levels in months. And then you blink, and in 5 trading days, anybody that has gone short, SPY right now trading at 432, we could say anybody that has shorted in the last 3 weeks almost is in the red. And if we get over 438, then anybody that has gone short in the last 5 weeks is in the red. And so what we're seeing right now is a previous couple of weeks of very confident bears suddenly being turned upside down and no longer being in comfortable positions. All right, so individual names, we're going to be watching how does Apple respond to earnings. At this point, it's a non-event. The low of yesterday on Apple is 175.46. We're trading right under that level, so technically daily consolidation will likely be underway here. But anything above 165.67, actually anything above 167.90, I would consider a daily higher low. And Apple's just going to be another one of the names that is trying to shape up the inverse head and shoulders next week. And if we confirm that inverse head and shoulders, that's the first step towards setting a monthly higher low. But it is a step backwards because everything else is gapping up and Apple obviously is not. But as far as names, again, I keep talking about Microsoft being our bellwether. If anybody's going to confirm monthly bull flags, which is possible for SMH, it's possible for QQQ. If anybody's going to confirm monthly bull flags, Microsoft is positioned to do it first. We're currently trading at 351, and that means we are less than 5% from an all-time high bull flag confirming. So again, going to continue to keep an eye on Microsoft as a potential bellwether. NVDA, gap up open, not a significant one. But again, NVDA monthly chart, no red flags whatsoever. Bulls will still need to confirm the daily uptrend. We have not done that yet. So again, yesterday we went over how you got the 4 quadrants of, are you looking bullish? Are you aggressive or conservative? Are you looking bearish? Are you aggressive or conservative? And it's the same thing as yesterday. Aggressive bears are looking for positions into hourly consolidation. Aggressive bulls are looking for hourly higher low entries. Patient bears are waiting for a big enough hourly pullback that creates the space for an hourly lower high to be the most likely result from there. And what do we have? Patient bulls are waiting for daily higher lows next week. Metal's still strong. Uranium gap up open now with CCJ. Just a ton of strength. And we have to admit that bulls have not created any support on the way up here. And we oftentimes see moves that don't create support, give it back pretty convincingly. When we do pull back, the retracement size can be pretty significant. But again, this is, for me, now the lows of October are a very important benchmark for the market as a whole. As we know, XLF, we've got to hold the low of October from here on out if this is going to be a monthly equilibrium. And it certainly is shaping up as a continued monthly tightening range. And if QQQ and SMH and NVDA, if they're going to be possible monthly bull flags, the lows of October need to hold. So that now in my mind is burden of proof. Bears must break those levels because bulls are going to be going off those levels. And again, the seasonality where we close higher, in the NASDAQ than the low of October. 88% of the time in the last 52 years, the bulls are doing their best to shape that up and keep that going. So again, we're going to watch growth names, watching to see if breadth continues to increase. So yesterday, what was so notable about yesterday's strength was breadth was increasing, where it wasn't the major names of Microsoft and Amazon and Apple that were surging things higher. It was IWM and ARKK. And so, again, that's what bulls want to continue seeing is the advanced decline. Just going to take a snapshot here. So this is on my Fidelity Active Trader Pro. And it just shows you how much of the NYSE is green or red on any given day. And this is significant increase in breadth. And this is what the bulls want to continue seeing to show that everything is participating in the rally and not just little pockets. What's TLT doing here? Nice gap up. So TLT, this is the most convincing bottom in a while. And I'm going to be looking to take profit here pretty soon. My target was weekly EMA 12 to take partial profit. That's up at 89. Currently at 88. So entry just under 85. If I take some at 88. So I could sell half here and be risk-free with a stop under 82 and just hold this position long-term and hope it's a long-term bottom. And looks like we're going to break the monthly stair step. We've seen a monthly lower high pretty much every month for 8 months, and that's going to break here if we get over 88.17. Some bullish divergence on the RSI on the monthly. And we'll have to confirm a monthly uptrend. When's the last time we've had a monthly uptrend in TLT? And I'll say that that hasn't happened. I mean, it happened here by 4 pennies. But other than that, we have not had a weekly uptrend since we topped out a year ago. Or is that 21? 2 years ago. So if the bulls really want to prove this move is for real, give us the first weekly uptrend eventually in 2 years. And again, that will glaringly stand out to us that things are shifting. As far as back burners, so there are back burners on the table. You just got to take it with a grain of salt. The best back burners are when you're in a weekly, daily uptrend and you're looking for an hourly high or low. We're not in, if I look at SPY and QQQ, we're not in daily uptrends. So I keep that in mind. Maybe that means I'm a little bit more picky. Maybe that means I use a smaller position size. But because of the magnitude of this move, we will be looking for first 5-minute oversold conditions in tons of names to try and shape up hourly higher lows. And so that is something that bulls are looking for to help guide as an entry. And even, sometimes when we're really confident, we just buy 5-minute oversold and start scaling in to that weakness. And maybe if we're a bit less confident because technically we're not in a daily uptrend, then we just say, okay, 5-minute oversold is now where I start paying attention. And rather than just scaling in, I wait for a level where I can say, that's either the low for this oversold bounce or I'm wrong, and then use that as a stop. So that would be an example of when I'm really confident, I'm just scaling in. And of course, I have a stop loss based on dollar loss. But if I'm a little bit less confident, maybe I'm waiting for a level to play off of versus scaling in. When you're scaling in, you're opening yourself up to a bit more risk. Because again, there's no clearly defined level that you're going off of versus something like a stair step, which gives you a clearly defined level. PLTR, so earnings reaction, 1844 is the key level. And I assume we're testing it now. No reaction. So this stands out. So an easy way to see relative weakness is any name right now that is not gapping up. With so many things gapping up in the market right now, anything that is not gapping up stands out with a little bit of relative weakness. And so PLTR, it's all about 1844 today. Anything above 1721 is an hourly high or low, keeping bulls in control. But if we cannot break 1830 or 1844, that shows us that the bulls are losing a bit of their momentum. So keep an eye. If I'm a bear and I'm looking out there and I'm seeing gap up opens, what level am I playing off of? I don't have a level to play off of on most names, whereas the open right here and now, PLTR bears have a level to play off of at 1830. So again, this is a little bit of relative weakness pre-market just to not be responding to the significant strength that we're seeing on the unemployment reaction. It all depends. So hear a lot about waiting for a daily higher low. Has not been much meat on the bone for those traders. It pays to be a bit more aggressive. At times, yes. But look at me in TLT. I entered TLT for the first time this year on a bull break. And I waited patiently for the setup to come to me. And meanwhile, I can't tell you how many times people have tried to enter this thing long over the last 4 months. So there's something to be said about being patient and waiting for the trade to come to you. There are also people that tried to buy the S&P 500 and NASDAQ dip here and then felt a bunch of pain on the bear flag confirming. So it's easy in hindsight to say, well, if you bought the low, you know, you've got a ton of gains in the short term. But there were people that tried to buy the low during the last couple of weeks that were punished for doing so. And so now we got a wave of people being rewarded to do so. So again, you can always look back and say shoulda, woulda, coulda. It just depends on what your, risk tolerance is and what your game plans are. For me, it wasn't going aggressive long into this weakness, but I was exiting hedges. I exited some hedges on Thursday, exited a bit more on Friday, and the reason I was slowly scaling out of those hedges is because of daily oversold conditions. And just knowing that, over the last year, daily oversold conditions have been a good point for reversals. And it's always, this time could be different, but it's a bit different to exit shorts versus start going aggressive long. I find it obviously a bit easier because it's a bit less of a commitment. All right, I got to wrap up. Lamont's about to go live for Chart Guys members. Again, cannabis video, crypto video coming later today. Bulls in absolute complete control. Hourly consolidation is inevitable. Hourly higher lows are the most likely result of the next consolidation. Keep an eye on those metals as the dollar continues to weaken. And have a great Friday.